Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in and take a look, see what's going on today. If you want to follow me, it's @Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics and subjects looking for investment opportunities, sharing those opportunities with everyone in the community, and going over a little bit of the technicals and the fundamentals for those companies during the midweek updates and the Q&A sessions that we hold on the weekend. If that sounds interesting to you and you want to learn more about my approach and strategies, definitely sign up. Specials, a coupon code that you can get discounts with both the monthly and yearly membership. Those discounts are in the description link below. Jordan says gold just began a secular bull market that will last well into the 2030s. If that is the case, this chart shows you how and why gold stocks could be reintroduced into mainstream investment portfolios the way they were from the 1960s to the mid 1990s. So you could see these large consolidation chopping price action. From 1960, it bottomed and went all the way up to 1980. This is a monster move. Again, we had a large consolidation in this pattern. Now, here's something that's kind of interesting here. We are right at the cusp or precipice of a big move coming in the Barron's Gold Mining Index here. What makes me think that? Remember the fractals. The fractal of this big pull down, second one, and then we usually come up, tag it, and punch through. We get a big pullback. So this here is this here. This fractal there is this fractal moving across. And we're somewhere up towards this upper right. You can see how that movement is very similar to this. Now, sometimes they stretch out a little bit. Sometimes they compress up in certain sectors. When we break through this, we want to have exposure to the area. And I don't know if you guys, you asked me questions, people on the website during the Q&As, hey, I'm up 200%, 150%, 300% in a stock that went up quite quickly. Guys, I hope that you have the ability to hold on so you can change your life here. When these start to break, you're going to see an acceleration. And I know it seems like a lot. I know it seems, a couple 100% seems like a lot. I think what's coming is literally going to shock most people. They're going to be like, oh, that's what he means. So what we did is, we rode in some of these, like this little area here. So think of it like we're in this like little area right before the resistance area. We're right at the resistance area. This coming is ridiculous compared to what we just have gone through. Like what's to come and the gains that could be had out in the future are much more than what we've just experienced. So keep that in the back of your head. Whoever you listen to, doesn't matter if it's me or someone else, keep that in the back of your head. These patterns, these are big patterns. When they break, they run for a good bit. Family Man CG says capital rotation flows into big uranium equities over years and pushes it to stupid levels like tech has enjoyed the last 25 years or so. I am obviously here, would love to hear your take. Crazy talk or legit? No, this here. So I look for these posts and then I try to find some evidence to help you guys gain confidence in what's coming. And my success of the YouTube channel and of the website is to teach you guys or to help you, mentor you, however you want to call it, of what is coming. And in order to make money, you need to have confidence in what is coming. It's not what's happening or happened, it's what's coming in the future. This here, like these patterns that you see, emerging markets outperforming the United States dollar, currency exchange rates that I show, These are all pieces to a puzzle, and these pieces create a picture or a story. And what we're trying to do is we're trying to decipher using these pieces of puzzles to put it together and create this picture or story. What this is telling us, this here, something very big is coming. That something, in my opinion, is inflation. And everything that I see in the market, everything, I can't even find much stuff that will stop this on the longer term, not the short term daily market news that everyone gets all bent of shape over. I'm not talking about the day-to-day news. The big picture stuff, everything is in alignment here. The valuations in relationship to history, the big technical patterns, copper, silver, gold breaking out, the fractal patterns, and the way that the herd imprints its mark on the charts, everything. Elliott wave structures. We're at the bottom of wave 2, entering wave 3. If that is true, which this chart is suggesting it is, we have some big stuff ahead of us. So, yeah, you're talking about uranium. I'm talking about precious metals and commodities. Uranium runs with the commodity group. So, are you crazy? No, you're not crazy at all. And what you need to do is you need to get locked in. What does that mean? What does getting locked in mean? It means you better have a strategy, you better have a plan, you better have the companies. And then you got to sit, wait, and get yourself a support group if you can't do that. If you can't sit and wait, if you have problems holding, if you haven't changed your mindset where we're going to go into this big bull market and break, you got to get in it now. Now is not the time to be wishy washy, second guessing yourself. You got to get locked in here. And what I'm telling you is from a place of wanting to look out for each other, right? So I want everyone to be successful. I want everybody on the website to be successful. And what's happening in the markets right now is ridiculous. These setups come once in your life. That's it. Once in your life, maybe for commodities. We might get another setup out in the future for maybe some other sectors, maybe. But this is going to be a big one. So get ready. It's coming. Is Trump losing his oil price manipulation mojo? I thought this was pretty funny because uh, not only is it somewhat true, I was thinking the same thing. I saw this, I was like, oh my God, this guy's saying the same thing that I was thinking. Yeah, it's heading higher. Oil's heading higher now. Are they going to come out and try to smash this thing? Are they going to try to pull a gold price or a silver smash? I don't know. Doesn't matter, guys. They can't stop this big move. It's 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 a it's above their pay grade. And they say, well, what do you mean? They run everything. Yeah, and it's above their pay grade. The market's going to force crap. And if they try to force it in one direction or the other, you're just going to get shortages. It's above their pay grade. They can't do anything unless they just completely destroy the market. I mean, I guess you could put us and throw us into some massive recession, but that would also destroy their dollar that they gain all their strength from. They need markets to go higher because that's a large form of tax revenue from the stock market. John Templeton says if you want to become really wealthy, you must have your money work for you. Yeah, you don't want to go work for your money. You need to have investments. You need to have money working for you nonstop. It's exactly what I'm doing. So here's the 5 levels of financial wealth. I want to go over this. Someone made a comment. A couple of people made comments. How come they don't teach people this? Well, here we go. There are 5 clear and distinct levels of financial wealth journey. Level 1 is your baseline needs are met, including food and shelter. That is level 1. If you can't get that met, then you're going to deploy all money at that. You'll have no extra money, no extra juice to go get some investments like the quote above. You're not going to have any money working for you. Level 2, all baseline needs are exceeded and a modest pleasures become accessible. This includes meals at restaurants, simple vacations, and spending on education. That's kind of like you've got your basic needs met, but you can get a little bit of stuff. You can have some fun, right? Level 3 is your baseline needs are no longer the top of your mind, and the focus is on saving, investing, and compounding wealth. More significant pleasures, such as multiple vacations, are readily available. More aggressive asset compounding generally begins at this level. So you don't want to be at level 1. And sometimes level 1 and level 2 is where everyone out there is sitting at. They get into debt, they buy expensive cars, they buy a house that maybe is a little bit too large for them. And uh, they're stuck with interest working against them through borrowing money. Level 3 is when you get out of that mindset, that level 2 mindset, get into level 3, and then you start compounding for yourself. That's where I want to be. So you've got a little bit extra spare capacity in terms of free cash flow a month. You start investing it, and then you get compounding growing. Now, level 4, most reasonable pleasures are readily available. Asset accumulation accelerates, and assets begin to generate passive income to cover some lifestyle expenses. This is the level of moderate financial independence, as you can reduce your active income and continue to live the same lifestyle. So this is where I'm most likely located, is somewhere around level 4 or somewhere like that. So I lived in level 3. I graduated college at level 1. I mean, I was like broke. Level 2, I was there when I started working and saved up a little bit, and then I could start to do some things. Level 3, I went straight to level 3 as fast as I could. I just started stacking as much as I could as early as I could. I was saving on the line of probably 50 to 60% of my income when I first started working. Like that's how crazy I was. But remember, I still had the mindset of a level 1 where I was broke coming out of college. So I hit that damn button as hard as I could. I smoked it. I saved everything. In the beginning, the most important thing is the amount of dollars saved, not necessarily your return. So I saved and saved and saved. I saved it, a lot of it, in 401k, Roth IRAs, in tax sheltered accounts. Level 4, it took me a while to get there. And what you need to do is you need to just go balls out and save as much as you can. Save and get to, I would say, Charlie Munger says get to 100,000. The first 100,000 is a really tough one. I would say that you want to get above that. Um, I would say you feel like you're kind of exiting everything when you get like a few hundred grand. What that means is if you get like a 20% return on like a $300,000 savings, that's $60,000, and that starts to change your mindset. I would say it changes your mindset. Like, hey, I can do this. I can get the heck out of this 9 to 5. And I kind of, I don't know, I hit that $300,000 mark pretty quick. It took me some time. I mean, I saved everything I could, and I didn't skip out on life either. Like it wasn't like what I skipped out on was all the stupid crap. Would I go on a super expensive vacation? No. But could I go on a vacation where it was kind of more bare bones with friends that were still kind of in college, and we would, I'd go visit people and stay with them? Yes, that's what I would do. I'd go visit friends that were still in college, or something like that, where it was pretty much minimal. So that was kind of level 4. It pushed me to level 4. I was probably in my mid to late 20s, and that's when things start getting real fun. Level 5 is all pleasures are available. Asset accumulation reaches escape velocity, and assets generate passive income in excess of all lifestyle expenses. This is the level of complete financial independence, as you can remove all active income and continue to live the same lifestyle. I am trying to go from level 4 to level 5. That's the stage that I am actively in. Now, I have a good chunk of dividends. The problem is, I am young, and a lot of the assets that I have accumulated are in retirement accounts. So if you were to look at my dividend income outside of retirement accounts, I have a lot of money saved, and some of it's in physical metals that don't give me returns. But I couldn't live just on dividends outside of my retirement accounts 100% yet. So I'm trying to transition from level 4 to level 5, where absolutely everything is covered off of an income from investments. I'm getting closer, but that still isn't 100% met. So I'm living in level 4. Um, I kind of I went, I flew through level 1 after college. I went right through level 2 to level 3. Level 3, I stayed there for uh, probably a good handful of years, maybe 5 years, 6 years, 7 years, somewhere like that. I went into level 4, and then level 4, I've been there for a while in level 4. That's where there's a big disconnect. You might save your first couple $100,000, but then in order to generate dividend income, you really need to save and grow it into millions of dollars, and then maybe multi-millions. And most likely it's going to be multi-millions. And if you get multi-millions, then you can live off that multi-millions of investment. So it depends what accounts you're in too. I have a lot of my big returns have been in Roth IRAs. So when I turn 59 or whatever, yeah, I could have a heck of a party, but I can't fully support. Now that is out there. It's a huge safety net. Another safety net that isn't in here are health savings accounts, where you can put money in a health savings account, start to grow that rapidly, which I am. And then my dividend income from my health savings account covers all of my health expenses if I were to get any. Right now, everyone's been pretty healthy. Hopefully that continues, and my expenses have been pretty low. You can also save up those expenses if they occurred against the health savings account. You can pay them out of pocket and then reimburse yourself in the future if you want to, as long as you keep the those costs, which I have done, and I can take out a almost an amount every single year if I wanted to from those dividends. Now that I've built it up, to pay myself back of all the costs that I incurred on this health savings account and plan that I had during that entire time. So I am doing that as well. Now, novelism says the first rule of handling conflict is don't hang around with people who are constantly engaging in conflict. This is something that smart people, in my opinion, or most smart people do, is if there are high probabilities of not just conflict, but of negative outcomes, you just avoid those. So, for instance, some people say, "Oh, I'm just so unlucky." No, more than likely you're probably just stupid. I mean, that's really what it comes down to. Almost everything is about statistics and probabilities and being smart about things. So, for instance, um, somebody will say, "Well, I got a DUI or whatever, right?" It's like, well, number one, you shouldn't be driving under the influence. Number two, if there's a high probability of getting into a fight in a certain location, avoid that location during that time frame. Boom, done. Um, avoid spots where you can get shot. Avoid spots where you can get in fights. Avoid locations and times where things are radical. If you're going to try to go from A to B very quickly, when's the least amount of traffic? In the morning when everybody's asleep. That's when I would do it. I mean, you kind of figure out, when these things are. When's the most? Maybe there's a spot where cops always hang out to give out tickets. Well, go the speed limit during that time, or avoid driving at that time if you can. And then you just apply that to everything in life. Hey, look, I could live longer by eating healthier. Well, eat healthy. Hey, I could avoid conflict. I could avoid danger. Avoid danger. I mean, it kind of just adds up. And that's where smarter people, they've done studies on this. And it's a multiple, I think, there's multiple inputs to this, but people with higher IQs live longer, make more money, make better decisions, have better FICO scores, on and on and on and on. Makes sense to me. The AI bubble today is now bigger than the dot-com bubble per Apollo. Yeah, it is. The price to earnings, CAPE ratios, all that crap, it's all it's expensive. Over in China, the lithium carbonate futures hit 8% limit up as rumors said several lithium miners will halt capacity for about 3 months. What's going on there? Oliver says analysts expect the largest ever gap between copper supply and demand over the next 10 years, raising energy security risks. If you have substantial copper assets in a mining friendly region, they will be extremely valuable. We've been talking about copper. We've been talking about this gap that's coming in the future. We've been talking about it sitting on top of its pattern right now, ready to run. It's all in alignment here, guys. A projected gap between supply and demand for copper raises energy security risks. That's what's coming, and that's 2035, this 30% gap. Mining needs up there. You know what makes this really weird? We don't have the projects. They don't exist right now to meet this gap that quick. You know what I say? That's a problem. That is a problem. Could substitution occur? I don't know. Do we have anything that we can substitute? I'm not exactly sure. Some people say, oh, it's graphene. Okay, where are these commercial, uh, 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 commercially produced high quality graphene pieces? Where do these exist? Now, could they be developing it? Yes. Is there still a lot of risk with it? Yes. But guys, this is it's a good opportunity. The June implied U.S. crude oil production looks like an anomaly. Implied U.S. crude oil production has dropped materially back down to 13 million barrels a day. The peak is now obvious as this thing is dropping back down there. Boom. Big drop in production. That's weekly EIA, U.S. oil production and volume. It's dropping down. There it is, the drop. So we'll see if that continues. Something to monitor and watch. Seth Klarman says investing is the intersection of economics and psychology. You know who the biggest threat is? Yourself. Yourself with doubt, with fear, with FOMO, fear of missing out. All these things influence the decision of an investor. If you can overcome yourself and you can do things different than everyone else, that is when you will become successful. Bar none. Moving on, silver alert. 1.5 years ago, I made the comment about silver possibly being on the verge of the mother of all short covering rallies. I even pinned this post because I believed in my thesis and analysis. I even positioned my hedge fund to be overweight, approximately 70% weighting in physical silver held outside of the financial system. We are now seeing other analysts understanding and realizing the setup. We'll be doing a roundtable discussion with these guys. And it is sleepwalking into a silver squeeze. Silver squeeze you can buy into. No. I bought all at this corner here. And 2020. I bought all through here, guys. Oh man, and I bought a little bit up here too. This is going to be insane. It's going to be insane. I love the setup. Love the setup. Smart Real Estate Bet says it should come as no surprise that mortgage rates dictate home affordability, and the linkage between them is extremely tight. And despite all of the hand-wringing about how high home prices are today, the effect of 7% mortgage rates today is not much different than it ever was. There's your link between mortgage payments as percent of median income and mortgage rate by quarter. And there it is. That's the linear trend. Looks like it's pretty solid there in terms of the R squared value relationship of this trend and where the data points are at. That just means the confidence level of the explanation of the trend that it is versus the data plots. Coming down, these are the new economic classes in the United States based on net worth, not income. Lower class is less than 10,000 bucks. Level 1. Level 2 is working class, 10,000 to 100,000. Middle class, 100,000 to 1 million. The upper middle class is 1 million to 10 million. The upper class is 10 million to 100 million, and the super rich is 100 million plus. What do you guys think? I'm hoping to strive to be in level 4 and 5. That's where I want to be. 4, 5 is where I want to be for the rest of my life. Fingers crossed. All right, Joel Greenblatt says, unless you buy a stock at the exact bottom, which is next to impossible, you will be down at some point after making every single investment. Your success entirely depends on how dispassionate you are towards short-term stock price fluctuations. Behavior matters. And that's true. He's very true on that. Peter Lynch says, when you sell in desperation, you always sell cheap. Think about that. Maybe not always, depending on how desperate you get, how easily desperate you get, and how bad your entry was. I mean, if you're chasing, doing FOMO, buying into tech sectors that are way up, and you sell when it's 20, 30% down, I don't know if that would still be cheap though. And that's all I've got. That's all I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Specials that coupon code. And then we'll catch you Sunday, 5 p.m. Mountain Time, coming up this weekend. If you guys like to join the Q&A session. All right, guys. See ya.